Hello, everyone. My name is Neha Narula. I'm the director of the Digital Currency Initiative based out of MIT, and I'm honored to be your moderator for this panel on navigating the uncharted waters of retail CBDC. I'm joined by my esteemed panelists. We have Governor John Roll, who is the governor of the Central Bank of the Bahamas, Director Mu Chen-chung, who's the Director General of the Digital Currencies Institute, based out of the People's Bank of China. We have Hannah Armelius, the Senior Advisor to the Sveriges Riksbank, and Christine Braden, who is the Managing Director, Head of Europe, and CEO of Citigroup Global Markets Europe. So today we're going to be talking about the motivations for even launching a retail CBDC. We'll speak a bit about the design choices that one might choose to achieve those objectives. We'll have a conversation about the role of the public and private sector, including conversations on interoperability and cross-border issues. And then finally, we'll close by talking a bit about the impacts and consequences of retail CBDC, something that is quite important and could have a dramatic effect on the global economy. First, I'd like to start with Governor Roll from the Bahamas. So, Governor Roll, thank you for being here today. I would love to ask you, what were your motivations for launching a CBDC in the Bahamas, the Sand Dollar, which came out quite recently? And what are you hoping that it will achieve?
Thank you, Leah. And let me first of all congratulate the organizers of this conference. We in the Bahamas, we started to pilot our digital currency at the very end of 2019 and worked to perfect it. As a matter of fact, we're still in the process of perfecting the currency, but it has begun a gradual release to the entire country, moving beyond the pilot. For us, the digital currency is a continuation of an acceleration of our payment system modernization in terms of modernizing our domestic payments infrastructure. We see it as a means to promote financial inclusion goals, as an opportunity to address interoperability challenges that are typical when you have private mobile payment providers. So we want to be able to provide an infrastructure in a very small country that may not be justified on just business considerations, that it's left entirely up to the financial institutions and individuality. We also want to make certain that we maintain a complementarity with our traditional banking services. And to understand how those goals play out in the Bahamas, even though we have very high levels of financial inclusion by global standards, because we're an scattered island country, you have those very remote communities where access to traditional banking services is very limited. So we have to address, if nothing else, a means of providing services to these islands digitally and providing the infrastructure so that those services can be provided. And at the same time, we're faced with some of the traditional banking services which are being distributed to the physical channels, retreating with the remoter communities being more impacted. And you hear increased public calls for access to banking services, but if you drill down, it is really understanding that there's a need for the transactional side or the payments related components. And so for us, we also think about what it is like to recover after a natural disaster like a hurricane, when, again, if you're relying on recovery of physical infrastructure, we've had experience where that can sometimes take a few months. So we need to have an accelerated means of putting infrastructure in place that even a government can provide social assistance electronically if necessary. And all of these help to rationalize the value of having a central bank digital currency, foremost in terms of providing the infrastructure for payments, connecting a lot of new providers of payment services on an interoperable platform which the central bank provides, and an emphasis on the retail distribution of digital currency, which by extension means that the wholesale features are there, but we see the wholesale perfection as something that we would dwell a bit more on after we've gotten beyond the retail adoption. because we're also addressing concerns related to money laundering and other, risk in the financial sector, digital currency is not anonymous. So we were very careful in making certain that we built in the anti-money laundering and related safeguards into the instruments. We also were very careful in making certain that the central bank draw the line in terms of what its role is versus the private sector. So we're not involved with the retail distribution itself. We leave that up to our financial institution. But the most important thing is that we provided the infrastructure, and we've been very careful to deal with the scales and other needs of smaller institutions around the know your customer due diligence systems, et cetera, that need to accompany such an infrastructure like this. But that is where we are right now. And it's, like I said, it's a gradual process of making the instrument available to the nation and addressing a lot of the regulatory issues, which we know will come up, but also leaving the space so that innovations in the financial technology space can take place.
Thank you, Governor Roll. Yes, I think what's launched in the Bahamas is so interesting, and it's clear that you have very specific goals in mind around reaching your population in this unique environment. Maybe could you speak a little bit about how you've handled some of those implementation challenges and some of the design choices you made in particular to reach your set of goals? For example, what kinds of choices have you made around KYC, around your choice to how it's intermediated by the banking sector? How have you chosen how to actually design this, given that there are so many different axes and choices to be made to achieve these objectives?
Well, the technology, for one, because it's being provided almost centrally, so you do not have the distributed ledger infrastructure that has happened for some of the crypto assets in circulation. But the main focus on the design stage was making certain that the platform was available for the financial services providers that are going to be distributing the instrument. And so that means that they would naturally have the interoperability that is necessary across platforms. We also appreciated that to stay current with the traditional banking system, we needed to make certain that we're tied into the banking system. So a focus has been on integrating the infrastructure to the retail ACH payments system. So that is a work that is very active, and we're working on a very short timeline to do that. So that was very important from the design side. We also focused on the design stage in terms of addressing an instrument that should provide the convenience of cash, not anonymous, but convenience also means accessibility. And since there is no discrimination in terms of how cash is provided to persons who might be within a population, we put a lot of attention into the know your customer due diligence rules and regulations around establishing relationships with financial institutions. And we did it in such a way that we maintain equality in terms of how one would go about accessing banking services. So the same rigor that would apply as one goes in to establish a bank transactional account would apply in getting access to digital currency. But we've put a great emphasis on tailoring onboarding based on risk. So if you're a very low risk retail customer, that is a very hassle-free process. And we were very clear to make certain that we had the regulatory structures in place before we started to introduce the currency. And we also are mindful of the fact that technology is sometimes, there's a bit of a learning process in using technology, and there might be some hesitancy on the part of some individuals. So even though the currency is distributed digitally, we put some attention into making certain that if individuals did not want to use a mobile phone, in those isolated cases, they could have access to smart cards to transact just as easily. So making certain that it was accessible and that we didn't discriminate in terms of who had access to cash. Now, the other interesting side of the design that we're continuing to work on is that in the cash world, there is no distinction between minors and people over the age of majority having access to payment. And so that is a very current focus, making certain that we address the privacy, consumer protection, and all the other issues that would relate to having persons along the entire age spectrum participate in the digital space, because we know that we cannot afford to have any sort of exclusion based on age.
That's fascinating. I haven't heard that point being brought up before, but it makes a lot of sense. Cash doesn't know how old you are. And so if you're trying to address that as a use case, if you're using that as a model, certainly you have to think about all sorts of different age groups and different types of populations that might be using it. And it's wonderful to hear about someone actually implementing digital currency and the lessons they've learned. And I'm sure we'll get to more of that in this conversation. For now, I want to go from the Bahamas to China, which is also quite far along in thinking about designing and deploying a retail digital currency. So Director Mu, I would love if you could give us a little bit about the motivations in China for deciding to embark upon this path. What are you trying to achieve with digital currency in China?
Thank you, Neha. It's very honored to join this panel. And actually, we have shared similar reasons or similar top value cases of drivers of develop a retail CBDC, but we also have different reasons. Firstly, is to safeguard the monetary sovereignty and the independence of the monetary policy implementation. Back to 2014, at that time, the crypto assets, including Bitcoins and Ethereum coins, were very popular at that time. So, but those crypto assets actually pose a threat to the capital account management of China, and also pose a threat to the monetary sovereignty and also the monetary policy implementation independence. So that's the first reason why we developed this retail CBDC in China. Secondly, is in order to provide a backup or redundancy for the retail payment system, because as everybody knows that we have a big two players in the retail mobile payment market. Those are the Alipay and Tenpay. They have become the significant important financial infrastructure, especially in the retail payment service sector. They have already taken 98% of the mobile payment market. And people go out without any physical wallets, without any credit cards or debit cards. They only bring their mobile phones with them now. So definitely they are so important. That means if there's something bad happen to them, either financially or technically, that would definitely bring negative impact on the financial stability of China. So in order to provide a backup or redundancy for the retail payment system, the central bank has to step up and to provide CBDC services to the retail payment market, and to be a redundant system or a backup system for the financial system. Thirdly, is in order to improve the efficiency of the central bank payment system with wider access and a stronger capacity. Over these recent years, there has been a trend that most of the central banks all over the world are improving their payment systems and provide a wider access to the participants and provide a stronger capacity to the users of the central bank payment system. So that's a lot of central bank actually are working on that, and some of them created fast payment systems, including the TIPS, the Buy Now, and MPP. So many fast payment systems. The CBDC, retail CBDC, is one of the those efforts to improve the efficiency of the central bank payment system. Actually, our digital fiat currency system is also one of those efforts to be to be done by the central bank. So the last but not least is to improve the financial inclusion. It seems everybody knows that China has made a very a big progress in terms of the economy, but we'll still have a lot of remote areas and poor areas. In those poor areas or remote areas, people actually are underbanked, and they cannot enjoy the mobile payment services and cannot enjoy the basic financial services. So that's why we are trying to build this retail CBDC system to improve the financial inclusion. Thank you. Back to you.
Thank you, Director Mu. And obviously, China is quite a different environment than the Bahamas, and you've been working on this for quite a while. Could you also share a little bit about how you've designed digital currency in China to achieve these objectives? What types of choices have you made around how it's implemented, how it integrates with the private sector, how you achieve things like KYC?
Well, the measures we have or the designs we have already adopted to achieve those value cases or drivers is firstly we curbed all the crypto assets trading in China and build this system in order to safeguard the monetary sovereignty. For the second design, we actually build this retail CBDC to provide a backup or redundancy. And the CBDC or the digital fiat currency of China has already become the legal tender, digital version of the legal tender. That means every merchant has to accept the our CBDC, retail CBDC. That means we could break the barriers between institutions, between payment instruments, and then break the barriers between platforms, including those e-commerce platforms, all those auto platforms. And then we could provide this backup to the retail payment sector. But of course, the paperback notes and those e-wallets, including Alipay and Tenpay, will not vanish because they will be this process of this issuance of retail CBDC will be a market-oriented approach, and they will coexist and they will cooperate in this retail payment system, retail payment service sector, and they could be the retail CBDC is only a redundancy or backup to the current or traditional incumbent systems. Thirdly, in order to improve the efficiency of the central bank payment system, we actually adopted a two-tier system. That means we almost mimic the same approaches of the issuance of paper banknotes and coins. So the first tier will be the central bank. We will issue the retail CBDC to the second tier, which is composed by commercial banks, payment service providers, and telecom operators, and all those private sector financial institutions. And then they will issue or exchange the retail CBDC to the general public. That's the two-tier system we adopted. And then this CBDC, our CBDC, or the digital fiat currency, actually will be loosely coupled from the traditional banking account. And our design also will be token-based, a hybrid system with token-based, account-based, and semi-account-based. It's not a two-mode system. It's a hybrid of three modes system. And with this characteristics, we could provide 724 hours, 724 services to the general public. And also with these characteristics, we can cover all the remote areas because people can open the digital wallets without the support of the traditional bank account. They can open a digital wallet only with a mobile phone number. And they don't need the support of the traditional bank account. And with the dual offline function, people in the remote areas without network coverage, they can still make payments with our retail CBDC. And of course, the design for the last value case is to help those people, either elder citizens or physically challenged people. We have designed a better, easily user-friendly app for those people to use. And also we provide display cards with QR codes on those display cards. They can also make mobile payments with scanning QR code or touch and go function. So they could be easier for those to be accepted by those elder citizens or physically challenged people. So that could, with this support of the CBDC or digital fiat currency, we could improve the financial inclusion. Furthermore, with the loosely coupled account linkage, those underbanked people can open digital wallet without the support of the traditional banking account. And then those people who don't have any traditional bank account, they could enjoy basic financial services in those poor areas or remote areas. This also could improve the financial inclusion. And of course, during our pilot projects, we also found out that's very valuable to incorporate or to cooperate with the private sector because we have already introduced the two-tier system. That means for the second tier or the 2.5 tier, we have a lot of private sector institutions, including commercial banks, PSPs, telecom operators, and chip makers, mobile phone makers, and algorithm companies, AI companies. All those companies could contribute to the construction of the system. Actually, every sector in the society have already joined this construction of this system. So we really enjoy the cooperation from the sector that they made a lot of contribution to the development of our digital fiat currency. And for the KYC, as I mentioned, we actually adopted a two-tier system. So the second tier, we call it authorized operators. They are in charge of all the KYC responsibilities, and they will take care of all those AML and CFT or counter massive destructive weapons issues, and to make sure the KYC is well solved. Thank you. Back to you. Thank you.
Thank you. Many important points there around access, I think, making sure that this is very accessible to everyone, and thinking about it as a backup for the for payments. Important motivations there. Turning over to Sweden, Hannah, the Riksbank, in addition to being the oldest central bank in the world, was also one of the earliest to begin thinking about CBDC and speaking about CBDC and writing about it. So can you explain a little bit about the context in Sweden and why the Riksbank initially approached CBDC as a potential solution to the problems in Sweden?
Yes, thank you. Thank you very much for having me on this panel as well. So, yes, the reason why we started looking into CBDC was actually because we were noticing that cash was falling out of usage really quickly in Sweden. It was back in 2017, the amount of nominal cash outstanding in the economy had fallen by almost half in about a decade. So, and it was also becoming more and more common to see stores and restaurants setting up these signs in the window saying, we don't accept cash here as a means of payment. So as the central bank, we had to sort of be prepared that this might continue and it might accelerate, and soon we would find that cash is no longer a viable means of payment because it has a tendency to sort of become a snowballing effect. The more it's not possible to use it, the less people will want to use it, and then even more stores might not accept it, and so on and so forth. Furthermore, this had actually been tried in court, so we knew that this was something that was completely legal for stores and restaurants to do. And so we had to prepare ourselves for a future where cash might not be around in Swedish society. I mean, we will still always offer cash to anyone who wants it, and we would still print it, but still, I mean, if it's not used, then basically we're in a cashless society. And like you said, we are the oldest central bank in the world. The Riksbank has been supplying cash to the Swedish economy for more than 300 years. So for us, this was a very big thing. And then the analysis sort of started, could there be any like adverse implication to the Swedish economy if cash disappears, if the general public does not have access to central bank money anymore? And then it becomes sort of natural to also further the analysis and think, would it be possible to sort of complement cash with a digital alternative, which could sort of function as cash did before in like a digital future? So that is basically why we started to look into the issue. And then from there on, we have been sort of looking into possible problems which a CBDC might cause and possible problems if we don't have a CBDC. But basically, the philosophy here is that we feel that this model that has worked for hundreds of years in Sweden, where the central bank is providing money, but is not perhaps the entity that has the retail customer surface. But we do supply money that's available to the general public, and we have a small presence in the payment market. So that is basically more or less what we have been thinking with our project, the e-krona. But I have to say that our project is not as advanced as the other two speakers here. We are just working on a sort of a proof of concept. We call it a pilot, but we are trying to learn more about the technical possibilities of different solutions. And we have actually sent in a petition to our parliament to ask them to look into the legalities of everything, and if they feel that it would be a good idea to have central bank money issued in electronic form in the future. So we are sort of awaiting legal parts and technical parts, and no decision has been taken to issue e-krona yet.
So yeah, so I think it's an interesting difference. It's different motivations for wanting to think about retail CBDC, very different than the Bahamas and China, given the decline in use of cash in Sweden, and given the research and experimentation that you've done so far. Have any insights emerged about what will work in Sweden or what won't work in Sweden, or sort of ways to address the issues you described?
Well, we have reached some insights, but we haven't really put our foot down on anything yet. Like I said, we don't really have a decision yet to issue an e-krona even, but we have noticed that we probably need some tools to be able to influence demand. If we're going to supply money to the economy, we have to have some sort of tool to perhaps limit the uptake, to make sure that we don't cause any types of troubles for financial stability, for instance. We have also seen that we can implement this without causing any problems to monetary policy. Only if the e-krona wouldn't have an interest rate, then the lower bound for the interest rate would be 0. Further than that, we are sort of leaning towards, like I said, probably a model where the public and private sector has a partnership.
Okay, great. Thank you. And I think we'll discuss a bit more about the different contexts and what that might look like inside Europe as well. Moving on to think about how the public and private sector might work together on a retail CBDC, I want to turn it over to Christine. So Christine, everyone wants to know how the public and private sector will play different roles, what roles they might play in the provisioning of a CBDC. And something that's been mentioned here so far is the ability to give citizens access to payments without a bank account. So from your perspective, what is the future role of banks in a world that has CBDC?
Yeah, thanks so much. And it's also great to be here. Thanks, Neha. I think there's probably 3 things I would say. The first one is really that the banks and commercial sector that work across the payments world really have a chance here to adapt to this new world. And so, if you think back to the history of money, we've had shells, we've had feathers, we've had beads, so the one thing that has changed over time is how money is actually exchanged in the economy. And so from my perspective, the first thing that banks are going to need to do, and or other payment service providers, is work through what is actually driving their adaptability. Obviously, our role is to interface with clients and serve client needs, and also to make sure that we are enabling the creation and risk-taking of money in its various forms. And so from my perspective, building that interoperability into our systems is going to be key. So the second thing I would say is there's a need for investment. If you look around the payment systems that operate across the world today, there's still quite a lot of friction. There's a lot of outdated systems. There's a lot of, lack of transparency, how things actually happen. And frankly, one of the biggest issues is just speed. So for example, a lot of our existing payment systems are not operating 24/7. They're batch processed. They have cutoff times that differ by different entities. And so making this world now operate properly, it's going to need investment to basically modernize existing payment systems we have so that they interface appropriately with CBDC. And lastly, I would say, I think an exciting opportunity we therefore have is to advise central banks and governments on how that could work, right? So we have a moment in time where we have huge change. COVID has only created a leapfrog in many ways of digital use of technology. Therefore, how do we, around the world, the private sector really partner? And I think all of the colleagues on this panel have talked about that beautiful partnership and how it's emerging at this stage. How do we partner to shape that future so that it is able to meet our clients' needs, but also support the needs and objectives of the governments and the central banks? But I think the other thing that obviously is an undertone that you've heard today is the need to make sure that we are ensuring, a sustainable partnership. I think, the extremes of potentially, commercial banks getting cut out of the system or deposits moving into central banks obviously would not be great for anybody, because what we do is we multiply the money supply in our respective economies, and that role should be maintained. So to me, it's about those 3 things: investing, adapting, and ultimately advising on how we create that new future.
Thank you, Christine. Yes, a lot of all three of those things to do. How might you imagine that things will look different in the future? Maybe not in one of the extreme cases, but what do you think is most likely to happen? How do you think the role of commercial banks might change, or will it change?
I think for sure it will change. And I think obviously on this panel, China is very much at the forefront of a lot of these, sort of the mass use of technologies like this today. And yet I still see that commercial banks, do have this role to provide additional services. So what I think will be very interesting is to see how, in effect, we can continue to do that, whether that is utilizing this for lending. How do we actually incorporate it into the normal products and services, just with a new twist, if you will? I think what's been interesting to hear today a little bit is also the future where responsibility lies. And the two-tier system we just heard about from a KYC perspective was one potential area where we will need to chart who has a responsibility for the KYC for our clients. That has historically largely, been with the private sector. Actually, if there's a future where that might be joint, that will be very interesting to see, or where we actually have the technology to make it a lot cleaner than it is today. I can say that if you just take KYC as a small example, about 70% of time spent and money spent around KYC is data capture. Maybe CBDC has the key to how we could actually do that a lot cleaner with a lot less effort and a lot less cost. So that could just be one example of a future that we could partner together on, so that we actually have a safer financial system.
Thank you. So moving to the panel as a whole, we've heard about the context in the Bahamas, in China, and in Sweden. We've heard a little bit about the interplay between the public and private sectors. And what we've seen here is that different countries have very different situations, different populaces, different public policy goals to achieve. There is quite a bit of commonality. There's no single model of CBDC that has emerged. But I think somewhere where we will have to reach some level of agreement is how to think about the use of CBDC outside of one's country. And that can happen in different ways. I think each central bank will need to think about the use of CBDC by non-citizens, by citizens who are present in another country, and also to think about cross-border use of their CBDCs. So I'd like to open up this question to the entire panel, but how do you think about cross-border use? Maybe this is most applicable to Sweden or Bahamas or China, but how are you thinking about how your CBDC might be used in other countries, and how are you thinking about non-citizens using your CBDC? Maybe we'll start with Director Mu, because you've already said quite a bit about potentially using your CBDC in 2022 at the Beijing Olympics, when there will be a lot of foreigners present in Beijing. So how are you thinking about non-citizen use of your CBDC?
Well, as I said, our first value cases is to protect or safeguard the monetary sovereignty. So there is a old Chinese saying that do not do unto others what you don't want others to do unto you. Our project is to protect or safeguard the monetary sovereignty. And also, I understand most of the monetary authorities or central banks would like to do the same to avoid dollarization. So I today would like to propose that some key values in making cross-border payment arrangements with digital fiat currency or CBDC. Firstly, the CBDC or digital fiat currency supplied by a central bank should continue supporting the healthy evolution and financial stability of the international monetary system. And CBDC or digital fiat currency supplied by one central bank should not impede other central banks' ability to carry out its mandate for monetary and financial stability. Cross-border payments arrangements with CBDC should comply with the regulations and the laws of jurisdictions concerned, such as capital management and foreign exchange mechanisms, and the information flow and fund flow should be synchronized so as to facilitate the regulators to monitor these transactions for compliance. So that's the second value of the compliance. And of course, the arrangements with CBDC should improve the transparency in cross-border e-commerce and helps to address the regulatory pain points in AML and CFT, custom and tax declaration, and capital management, etc. Of course, interoperability should be enabled between CBDC systems of different jurisdictions, and the exchange of CBDC could be processed at a virtual border between digital wallets, between the different digital wallets. And we also propose a scalable and overseen foreign exchange trade platform supported by DLT or other technologies could be established. So those are the values or we shared with other central bankers or money authorities. So we'll comply with the same values or principles in the future and with our CBDC in the cross-border use cases. Thank you.
I think you raise a very important point there, which is that we will need broad cross-cutting principles and values to think about these use cases. This can't be done entirely independently, considering the effect that these choices will have on outside countries and neighboring partners as well. Governor Roll, how are you thinking about the cross-border use case in the Bahamas?
Well, I think the points that Director Mu make are all very valid. But when you drill down to the retail level, initially, in the case of the Bahamas, we believe that anyone that has a mobile wallet will ultimately only value the convenience of it if they can make cross-border payments. We do not have a design where one can use the Bahamian CBDC at point of sales outlets outside of the country, but we have encouraged integration through the traditional foreign exchange market so that if payment providers can have products that have that conversion happening behind the scene, then we endorse that. And we've already seen at least one of the local partnerships where that international accessibility has been provided by tapping into the traditional foreign exchange market. And I think that sort of draws out some of the parallels in the way we have access to our traditional deposit instruments in making debit card type payments internationally. At the same time, we've said that if you are a non-resident coming into the jurisdiction, you can go through the established KYC and conveniently use the digital currency while you're in country. So it would not be very, I think, practical to limit who can use the currency within the border. But I do think the issues that China is raising are going to become much more important when we start to deal in a world where we expect the payments and settlement mechanism to be 24 hours available, which is not the case. And I think that is one of the conveniences which is going to take us beyond some of the current mechanisms that we're using for cross-border settlement, notwithstanding the fact that there's still a focus on the cost of the settlement process itself. So, but for the present, I think some of the fintech innovations will permit the cross-border payment settlement, just capitalizing on the existing mechanism.
Thank you. So I think you raise an important point as well, which is that there's certain things that might be practical to implement or restrict, and then certain things that are just impractical to implement or restrict. People are going to use things in ways you might not expect. And sort of speaking of that, the last question that I want to get to is about a little bit about the risks, the potential risks of such a significant change in the structure of our payment system. So what are the risks that we might need to mitigate when considering a CBDC? Maybe Christine, I'll turn that over to you.
Yeah, sure. I'd point to two at this stage. I think the first one is to actually think about, or ask the question, can we think about retail CBDC without thinking about wholesale? And the reason I mention that is that, on the other side of the coin, let's call it, you will have the clearing houses, you'll have all these other merchants, for example, and what sort of limits will they have, right? So you may end up with, yes, very small retail CBDC per individual, depending upon how you limit it. But then what are the wholesale impacts to that and the aggregation impacts of that? And does that create any sort of systemic risk or, other consequences? So that would be one. The other is, to this point about setting standards. I actually think we could get to a world where we have a domestic proliferation of different kinds of CBDC that still don't talk to each other. And so to your point about cross-border, I think it's interesting to think about, how whether it's the BIS or other groups could really work on, if we're going to create this new future, how do we create it in a way that we can avoid the pitfalls of the past, which was tons of money having to get invested in making things interoperable. So those would be two that I'd point out.
And I think that's an excellent point on which to close, thinking about what we can learn from the pitfalls of the past with the design of different types of technology and payment systems. How can we avoid those pitfalls moving forward and make sure that we are building systems that can talk to each other from the beginning? So I want to thank all of my fellow panelists for joining us today. And for telling us about their experiences and some of the motivations for designing retail CBDC. And thank you to the BIS Innovation Hub for hosting us and for hosting this conference. So thank you all.
Thank you.
Thank you.